Hey everybody, good morning. Welcome to the stream. Goose, what's going on, buddy? Donald, Sergio, Andrew. Let's see, we got Lori, Craig, Piet, say Gina, Gary, Svinborn, Sledge, channel member. Thank you for becoming a channel member. Scoop Crew. what a what a name. I love it. Jeff, Catherine, Ted, Tiger. That's Darren, I'm sure. Kimberly, welcome everybody. Welcome to the show. Dun, 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 dun. Hopefully, hopefully we can find something to trade today, or something interesting anyway. Thank you everybody for being here. We're going to dive into the money printer. Already firing up today. Fed is set to fire it up. Already doing. I'll talk about the numbers here, but already doing it. Already doing the thing they said. I mean, that's. So this wasn't like a almost maybe we're thinking about doing it. They were already ready to go. This is not just like a oops, maybe we'll do it. Maybe we'll kick this off. So it's just absolute wild. Absolute wild that this is already happening, I guess you might say. And I clicked on the wrong tab. Cool. 1 second. Go grab the right tab. Click, 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 click. And man, rookie mistake right there. I think I just started doing this. All right. Close the tab I needed. That's what happened. All right. Hey, everybody. Welcome to the show. When it finally happened, after months of pretending that, we're all grown up, we don't need quantitative easing anymore, we could tighten it, we could take away the punch bowl. Well, turns out this economy is too addicted to Fed money. So we're firing up the money printer today. Of course, we don't call it money printing. We don't call it quantitative easing. No. That would be far too honest. Instead, we have a new, fancy, new, boring name. We're calling it reserve management purchases. Doesn't that sound responsible? Doesn't it sound like no big deal? Don't pay attention to the man behind the curtain. It's kind of like when the teenager says, "We're not throwing a party. We're just having a small supervised get together with a few of our close friends." We all know how that kind of ends. We've seen movies about it, right? So maybe you've done that. So what is the Reserve Management Purchase Program? Well, in simple terms, the Fed is going to be buying up billions and billions and billions of dollars of government debt. Well, this is different, though, than what they had been doing. They have been buying mortgage-backed securities and bonds, but now we're going to buy specifically from the government debt. Starting this Friday, they're kicking things off with a cool $8.2 billion. That's today, if you didn't know. And they plan to buy a total of $40 billion more over the next couple of weeks, by the end of the month probably. And that's just the starting, that's just the warm-up here, the prelude. Some analysts are predicting that this could ramp up to north of $500 billion in a couple months. Now, the Fed, Jerome Powell, will very adamantly tell you this is not quantitative easing. This is not QE. This is not what we're doing. This is just a technical adjustment to make sure the plumbing of the financial system keeps working nice and smooth. And to be fair, there are a few key differences here. Quite technical, but let's kind of go through those. They're buying short-term debt, not long-term bonds. All right, let's be real. When the Fed is creating money out of thin air to buy government debt, if it walks like a duck, quacks like a duck, sounds like a duck, smells like a duck, well, you know the rest. And the market certainly seems to think that this is money printing. Stocks have been ripping. We ripped, we dipped, and we ripped right back and had the highest S&P 500 close of all time yesterday. Why? Because the Fed prints money, that money goes somewhere, and most of it ends up right into the stock market. Pushes prices up, and what does that mean for us, the savvy traders and investors? Well, stocks that have been hitting all-time highs, that's an opportunity right there. And the game changed, though. This created a different opportunity, different than we've seen. So let's talk about it. Precious metals, gold, silver, they've been on an absolute tear. Gold knocking on the, just right below its all-time high. Silver is pretty much going parabolic, up over 100%. Hopefully you got a piece. I said that was going to be the big winner of 2025. Haven't really found what I thought was going to be the biggest winner of 2026 yet. But why did they move like they have? Because when the Fed prints money like they are, they devalue the dollar. And when the dollar gets weaker, investors go to things that, kind of survive inflation and devaluation of fiat. Fiat being US dollars and any other currency that a government makes that's not really limited by any kind of supply-demand constraints. Now, the silver story is particularly interesting. We're now in the 5th straight year of a supply deficit, meaning that all the silver we've kind of piled up for years and years has been suddenly declining in the last 5 years. That supply that was growing and growing, now all of a sudden it's dwindling and dwindling. And this is the 5th straight year of dwindling supply. And we actually use silver in a lot of things, like solar cells and electric vehicles and all sorts of electrical equipment and electronics. And that deficit is getting bigger. And now some analysts are calling for maybe 75, maybe 100 on silver. And I said, once we get through that 59 level, that we could be ripping on higher. And if we go to the historic ratio between gold and silver, we can still see silver up at like quite high prices. Historically, it's running a 1 to 15 ratio. That could put us quite a bit higher. Quite a bit higher. 300? Maybe? This is not a prediction, though. But it shows you the kind of upside potential that if we just go back to historical averages, that could be out there. So how do you get in on this? Buy physical silver and gold, of course. Watch out for pullbacks. Or you can invest in ETFs. The popular ones, GLD, SLV, but I like the Sprott funds better. You can also look at mining stocks, which give you leverage exposure to the price of the metals. Now, if you find that precious metals are a little too volatile for your taste, platinum's a good choice too. Copper coming on. Now, there's a more conservative opportunity, though, and that's in the world of treasury bills or T-bills. These are short-term loans to the government, and they're considered one of the safest investments in the world. And right now, you could get a pretty decent return on T-bills, right around 3.6%. But here's the thing. The Fed's about to start buying them, and they're about to buy a huge amount of them. And when they do, it's going to push prices up and yields down. This is like a little bit counterintuitive for most people. When the Fed is competing with the market and we have more buyers, when we do these T-bill auctions, it actually pushes the interest rate down. That's good for the government, right? So this is kind of like, if you think about it, this is a circular firing squad. I was talking about the Fed doesn't have room to cut anymore. So what they're going to do is they're going to try to push the 2-year constant maturity rate down themselves by buying treasuries. It's a genius plan, right? So, you can buy T-bills directly at treasurydirect.gov, or you can invest in a money market fund that holds them, like T-bill or bills, either one. And I can pull those up in a minute. So there you have it. The Fed is back to its old tricks. The markets are loving it so far. And if you're looking for the explosive potential of precious metals, well, you can go after it. If you want the safety of T-bills, you can go after it. The opportunities are here for those of us that are willing to jump on it. Just remember, don't fight the Fed when they're money printing. The opportunity is to ride the assets that increase in value while they print, get out at opportune times when they burn it all down, because it's highly likely we see another big correction at some point. So let's go dig through the charts, kind of find out what opportunities we might have today. Shall we? Jump it over here, jump it over there, jumping everywhere. Hopefully that's the right screen. There we go. All trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, including T-bills, stocks, options, bonds, forex, futures, cryptos, treasuries, gold, silver. If you buy them, you might lose money. If you trade them, you probably, you're highly likely to lose money unless you're careful and you know what you're doing. You have a plan. Be careful out there. All right. A lot of people lose money trading. So I try to demonstrate a stable, consistent way. If you want to hire and consult somebody to tell you what to do, you can do that. But I highly encourage you to take a vested interest in learning how to do this yourself. Check it out. All time, over 40 grand year to date, getting close to 41. This is how you do it consistently. I started this mission right back here in April, tax day, refunded this account with the goal. If you're new here, welcome to the presentation. My goal is to generate 1 month profit, get this number up to 50K per month. Right there. Get that number. It's not there, right? I started this April of this year. Why? Because up until this year, I've pretty much almost exclusively been trading in retirement accounts. And I was kind of like, man, this guru thing that I'm doing has a lot of ups and downs in the income. You get a big payday, then you get nothing, and it's a ups and downs thing. And a friend of mine's like, why aren't you making consistent taxable income by trading? I was like, well, because I put all in my retirement accounts and blah blah, blah blah, yakety schmackety, and well, it was kind of like a light bulb moment. So I pulled together as much cash resources as I could into this one account and started. Hardest part about any journey is starting, right? So we started back in April, up to 7. Fairly consistent, not extremely consistent. You see the 3 month is just double 7, not triple 7. So it is kind of increasing here. You see on the total year here, year to date view, we had kind of a nice climb rate, got that nice pop on Rocket Lab. Then I kind of slowed down and I was like, what the heck am I doing? I need to get on it. Got to get to the goal, and started climbing a little faster. And you can kind of see it more dramatic here when I click all time. You can see we're climbing pretty good, still climbing pretty good. And then we started accelerating, got more aggressive. And I try to book out some profits every day. That was kind of a change I made right back here in October, as I started trying to get profits on the books every day. Right there. There you go. That's how you do it. That's how you be consistent. That's how you make money in the markets. Find a plan, work the plan. I do it with the wheel strategy. It's kind of like my core strategy, and then I add on some credit spreads and things like that that are all high probability. What does high probability mean? It means that your chart goes up and it doesn't have big dips like this little dip, this little dip. The dips kind of get lost in the overall big trend. A lot of people, theirs looks like this, right? Yours look like this. Get some big swings up, big swings down, maybe making progress to the upside, maybe not, maybe coming back to zero. Is that the way your chart looks? You're trading too aggressively without a plan to consistently make repeatable gains. So I digress. S&P, look at that, man. Wow. So ES didn't make a new high, but SPX, well, SPY specifically, yesterday closed at an all-time high. We touched higher back here, but we closed at the highest high we've ever closed at yesterday. Gotta be careful listening to everybody. Like, there's very specific, when they say, "Oh, SPY closed at all-time high," but it wasn't. We didn't actually touch the all-time high. Yeah, that's the highest price we ever touched, but that was the highest price we ever closed at yesterday. It's kind of funny, right? It's a lower high, but it's the highest close ever. Made all the headlines. So ES is still in this position where we could get a big flush, because now we're at the point where I was kind of warning that we might get a big flush. Has me on a little bit of cautious coming into the day. A little bit of caution, because especially with that tail. Look at this tail right here. Diving in, looking at a little lower time frames. What made the tail? Right here, we pushed it right up into that close. That was the daily close. The market closed back here. Right around. Right in here. We ripped it. And then we got back down. And then this is not the most bullish price action here. So that pullback yesterday, I was kind of talking about this, that if we broke above that 68.90 area, we were probably going to go on up. That was the target. We got there and stopped. Now, probably coming right back where we were. Funny enough. I mean, funny how this works. That's that volatility. So we're kind of hitting a wall. That's the long and the short of this. There is a significant resistance getting through this area. There's the all-time high right up here on the futures. We got up into this no man's land. That pullback right there propelled us right up to the 1448. 90% of the way to the 1272, and we rejected off of it. If we can stick this back test of, kind of back testing that high from back here in November. And this was the high late October. Initial drop, recovery, secondary drop. If we can kind of stick that high on the retest, we could push this out to a new all-time high. Keep the Santa rally going here. But this is a cautionary spot right here. This can definitely do the bigger pullback. We're sitting at a lower high. This is caution. Don't get caught. Like, if you're aggressive right now this is probably not the best time to be aggressive, either up or down. There's real potential that we get a couple 100-point pullback, and it could go really fast. And everybody can be kind of like trying to guess why. Might just catch people by surprise. Financial media may be struggling to... Of course, it could be something completely obvious, like, hey, somebody shot a missile, somebody blah, blah, blah. I don't know what the reason is going to be. It's going to be the door flying off the Boeing. For those of you that have been around when I predicted the Boeing was going to drop, and then the door flew off, and then Boeing dropped. Kind of like one of those. Like, I know the drop is probably set up in the charts. Look at this. NASDAQ. More confirmation than S&P. Even more confirmation that we're probably going to do a big drop here. So this is one of those moments where I see something coming, but I don't know what it is. It's probably going to be like a 3% pullback, at least 3.5, like 900 points on NASDAQ. Cash bot entry fired off. Russell. Oh, so this is, I thought we'd touch. Thought we'd touch it. 2,600. We're 5 points away. Dang, man. So this might be the signal that we top. Like when we hit that line right there, that might be it. That might be the top. Russell might be front running the potential pullback here. This can invite a negative reaction. Right there. Oil. Still gunning for the breakdown. Right now we have this low from back here in October. And I expect that we're going to push down into low 50s, if not high 40s. Right down here would be the ideal, like kind of like 49 is kind of like the most ideal spot. Push down in there. We may see missiles fly in the Middle East to try to get this oil price back up. You know, last time we spiked down in this zone here, we started shooting missiles. Right here. Started shooting missiles. And, you know, everybody's like, oh, it's geopolitical tensions, blah, blah, blah. It was oil prices. Oil got too low. They needed price back up, so they shot some missiles at each other. And guess what? That lasted for a little while, but it's bleeding back off. We get back down here, we got to shoot some more missiles. It's that simple. Gold, pushing back up. We're right at the level that I kind of thought we might come up and tag. If we can actually break out, we could come on up to 4,600, but be careful. This is still a lower high. This still completes the ABC and still invites the bigger retrace, even with the money printing. I'm very cautious on that chart. I would be looking for an exit on gold, not for an entry. Despite all the money printing, booking profits is the smart way to play. Picking it up on the dips, that's the smart way to play. Bitcoin still not, you know, I really like the fact that we saved the day yesterday. That was looking really ugly when we were down here. But coming into today, we're sitting here just cooking under the breakout. If we pop and stop right there, that's not good. If we only get to like 96, 97,000 on Bitcoin and then turn back down through this consolidation, we just pop it right here and turn right back down. No good. No good. We need to get up here and clear this 618. Clear the 106,000. Need to pop right on up through here. retest that, and then go higher. That would be a sign we're going to all-time highs. So if we reject in here, probably indicating that this Bitcoin correction is going to last another 10 months. Probably bottom sometime between July and October of 26. And the price target down around 30 to 40K. If we reject right here, that's another confirmation that we're going to keep, we've already confirmed that the crypto winter could be here. Like, this was the initial confirmation. This first move down, we bottomed at a reasonable spot at the bottom, and we've kind of been hovering right here for 2 weeks, almost 3 weeks. Hovering. If we reject off of some of this resistance on the upside, even if we get up to here to 106 and reject, like even if this pops on up and rejects, still indication of crypto winter. Now, there'll probably be we'll probably push down, and then we'll do a rally for a little bit. People get sucked back in, and then we'll push down more. That's probably what's going to happen. So just be careful out there, being aggressive in crypto until we confirm that we can go higher. Ethereum found resistance right in the vicinity of the roadmap line. If you don't have this on your chart, you can click on the homepage of the channel for free. The video I have pinned there, I give you the code and explain basics of how it works, at least on the bullish side. It works both ways, up and down. Price is coming down, downtrend, comes back, bounces off the roadmap line, trend, pullback, continuation, right there. Normally I'm hunting for it, trend, pullback, continuation, because the market's typically bullish. Like the last 150 years of the market, it's all usually going up 8 to 10% a year. But any given chart, like Ethereum, is already in a downtrend here. When they go from the upper left to the bottom right, that's a downtrend. When they go from the bottom left to the upper right, that's an uptrend. So this is in a downtrend. Pretty simple. How do you know it's in a downtrend? It's very simple. Price is going from the upper left to the bottom right. NKD, indication of global liquidity. Now this is the tell right here. Despite the money printer firing up, this is why gold might pull back. This is why Bitcoin might pull back. We're seeing a resistance to breaking on higher on global liquidity. This is my global liquidity indicator. The Japanese stock market. People go borrow money like crazy in the Japanese stock market, push those prices higher, and then take it and pump it into higher risk assets. Big tech, Bitcoin, gold, Bitcoin specifically. Things that are moving. Things that can get higher return than the Japanese stock market. Borrow money here, pump it over here, make big returns, pay off your bills, borrow more money, rinse and repeat. This right here, indicating we may return to the roadmap line, and that may continue into early next year. That would be not so no bueno for the continuation of a Santa rally. Dollar down to the critical level here. As I said, below 98.5, we're probably going to make a lower low than we made back here in September. And we're right at it. Right at the level. See if we can push this on down. Get continuation lower. It's probably not going to be, it's probably going to have pullbacks, and, this has been choppy on the way up. It's going to be choppy on the way down. We've got an initial move. We may see a little bounce before we continue more aggressively to the downside. But odds are, now that we're down below, now that we got the daily close yesterday, below 98.5, odds are we're going on down. Apple dumpling. Let's crack a leckin. 292, still the upside target. We're just back testing the, basically that candle right there. Setting up for the rally. Now if it fails, coming on down. But right there would be the expectation. Now, Apple can sometimes be a flight to safety. So if we get a pullback in the market, Apple could rally. Be interesting. Amazon has this giant head and shoulders thing we're cooking here. If things get ugly, we could see this accelerate to the downside. So far, holding on to the roadmap line, but also respecting the 618 right there. And moving down. Downtrend. You know, on the smaller time frame here. Off this high, we're moving down from the upper left to the heading toward the bottom right. So if we don't respect this neckline, things get bad to the downside quickly. Google, I think we're still kind of sitting here cooking. We may have to retest that 304 one more time. I think we're still cooking for a 337 pop before we do a bigger retrace. But if this doesn't hold right here at 304, it can easily come all the way back down in this zone. About 50, 60 points down. Meta, I want to see this come on back down, get back to the 630 area at the minimum. 620 be great. Retest that. I'm probably going to add a position if we can hold it. This is a big bullish pattern. It'll be a disappointment if we break down lower, but this was a beautiful 618 correction off of this high back here. So that high, we tagged exactly where I thought we would, almost to the tick. Bounced up, found resistance at the daily roadmap line. Retrace, hold this 618, sets us up for the big run in a big way. Could be up here, these kind of targets. 1,000, 1,100, 1,300, 1,100, 1,300. Big upside potential. Microsoft is continuing to be soft. Still holding on to the 618 here. So we've dropped down to the initial support zone that I thought we would. I thought we'd get, we didn't really hold the roadmap line at all. But coming back up, we found resistance there pretty solidly. We tested at 1 day, 2 day, 3 day, 4 day, 5 days, 6 days. 6 trading days we've tested the daily roadmap line and have not been able to break through. Then we've tested this 618, 1 day, 2 day, 3 day, 4 days. If we get down here again today, that's 5 days. So this is the zone right here. It's price is squeezed in here. Breakout or break down. Flip a coin. There's no holding this on the downside, bearish. Holding this on the upside, bullish. This can result in a pop. Of course, that could be a temporary pop and a fake out, and we drop. If we get below here, probably coming down here at least, at the minimum, 460. But if we get below this kind of orange zone I've got drawn on here, could be looking at something further down around 415 to 420. NVIDIA keeps being weak here also. If we take the bigger spill, this will probably come on down, maybe retest that 150 area. That was the highs from last year this time. So basically that's the breakout zone. We broke out through that, came ripping on higher, tagged the 1618 at 212. Coming back to retest the breakout. Classic, normal price action. It's not anything earth shaking. So be careful. Chasing that one long. Tesla, maybe we can finally stick the breakout here. This one's due for a run to 488, possibly 500. 550 is the bigger swing target from the high we made back in December to the low we made Liberation Day. 550 is the expansion. This one's been lagging, hasn't been expanding like the rest of the big tech. 611 and 809 would be, if we actually caught up to the rest of like big tech, we could be up here at 809. That would be an absolute wild move. So one step at a time, 550. 488, the nearest, smallest little bounce target here. 488 could invite one more pullback. So we could pop up here, hit 488, retrace, retest these highs right here. Could come on up to 500 and then retest this before we push on higher. And this could take months. I mean, this could be out here next year before we get up in that zone. So all about time frame. Netflix looks like we have initial indications that this was finally the retest bottom. I'm already long. I kind of front run the bounce up here. Had to have one more little dip, it looks like. Now I'm looking for this to at least come back up to the roadmap line, if not do a full 618 retrace up here around 117 to 120 area. We do have that gap that we did back here that we'll probably go struggle with up to 124. But that was it. That was potentially the downside on Netflix. Took way longer than I thought we would do. This much faster, but this, this draw took a while, but we finally got there. Split has been bearish, as I predicted. Alrighty, SMX, this dumpster fire continues to be on the daily list. Watch out, this is probably going to... Now look at the daily roadmap line, all the way up here at 240,000. That's because of all these reverse splits over and over and over. Garbage. Absolute garbage. Don't touch this thing. Lulu popping on earnings. Beautiful. Fully filling the gap down. Beautiful. Look at that. Struggled to get into the gap fill and then just pop through it. Watch out for retrace though. That's only 3. If we do a continuation, this still looks best with a little touch down here around 140. Still looks best. Now this could be complete. We did come up a little shy of the ideal target down here. Really wanted to see this possibly down this 120 to 140 area, but so just keep an eye out. Like this could be a little bounce like this one right here. Just be careful. PPLT. Dang. Well, anybody that rode that from wherever I called it, that's 160. That was the profit target. Nailed it. If you got a piece of it, start considering reducing some risk. We could go on up to 206. Nothing's guaranteed here. I mean, it could run on up to 270 even. Could. This was the higher probability target. Everything above here starts dropping off dramatically. Can do it, but if you went heavy on it, be careful. Further upside, not necessarily guaranteed. Shiny. GLD. Now I was talking about the Sprott funds. SPROTT. If you want to play gold and you don't want to be subject to the potential that GLD doesn't have the gold to back the fund and it goes bust or something like that, these in silver too, PHYS for physical gold, PSLV for physical silver, URNM for uranium. I guess physical uranium is SRUUF. I guess you got this one too, U.UN. That's on Toronto. You got platinum and palladium down here, SPPP. So if you want to get into some of these and not have exposure to the fact that GLD and SLV constantly fail their audits, play the Sprott funds. They're not nearly as, glorious, but Already forgetting the PHYS. Lower cost too. You can get more units for the dollars thrown out there. PSLV. There you go. They're not leveraged. But they are guaranteed. You know, Sprott gets audits and proves that they have the reserves that they say they do. So there you go. Those are more secure if you wanted to make sure that you have less exposure to the fund coming up short of what they say they have. If you have no idea what I'm talking about, just ask AI or Google that a little bit about GLD not having the reserves. NTES, you know, short-term trades, no problem. Longer-term trades, longer-term holds, be careful. This can break above the 618, 163, be the upside here on NetEase. Let's see, AVGO had earnings coming down a little bit. Let's see, I did a play with Jack yesterday during Market Masters. Let's see how we're doing on that. Yeah, let's do it. I'm at 352, 350. And let's see. 14 cents is down to 4 cents, so not bad. Not bad. See what it says. Cool. It's not giving me the oh, there's the statistics. And 94% likely to not get in trouble today. It's up from 96 yesterday. So I guess if AVGO gets a little more aggressive to the downside, this could be in trouble. I don't know. Keep it rolling for now. Was popping, but now we're dropping. So light giving it up a little bit. You know, we're seeing some of these high flyers giving up a little bit, but ASML likely to push on up 1200 at this point. That's the next upside. 1185 to 1200. DRT giving back a little bit. That has the pattern to come on down. STX, you know, taking a little froth out after hitting all-time highs. Looks like Team is a downtrend. Roblox, downtrend. ABVX. No, the biotech pharma, not touching it. Yeah, I guess there's some sort of buyout potential deal going on here, but be careful. I don't play the biotech space. It's just not for me. Too much volatility. I'd rather consistently make money, not make money, you know, not make a ton of money on a lotto play. CRDO. Probably going on down. Let's look at stuff actually set up with potential for bullishness. Stocks set up with my roadmap pattern on a bullish entry on the daily chart here. Here's the high. Here's the low. There's the entry. 11 is the target. There's the algorithm actually firing it off. And no statistics on that one. ASTE. Here's the high. Here's the low. There's the entry. 52.35. That was just real standard. Like this, just normal 38 trades. Check. 73.6. Check. That's, you know, right in the 75 vicinity, and 1.6 is a little better than 1.2. This one's probably going to work. I mean, it's just like 75% likely right there. 52.35 is the target. I always go just a little bit low, so I guarantee a fill, especially if I'm playing shares. But AVY, a perfect example of I want to show this off. I played this one on a 30-minute bounce right here. I should have held on. Sold it out yesterday. I played this with a spread when this fired off. Didn't do anything. I missed that exit alert. Just wasn't paying attention. I had alerts on the chart even, and I just didn't even see it till the next day. And yesterday, I was like, well, I'm up $4. I'm getting out. Now here it is right back at the target. So never guaranteed. But that's why that right there is a classic example of why you should book profit at the target. Look at that rejection. Right back down. And give another opportunity to get out for profit. Right there. But it could easily have broken down from there. So this works all time frames. That's a classic example right there. This is from the Apollo system, the namesake of the algorithm here. This was actually thrown out there in Apollo. So AVY, Avery Dennison. Yeah, let's get some labels. Actually, I was like, I think I wrapped my truck in that. No, I bought the competitor brand. I didn't buy Avery. A lot of Cybertrucks are wrapped in Avery. They make vinyl wrap for trucks, Cybertrucks, and all the other cars too. So, potential upside right here, 193. BYD. Here's the high. Here's the low. Entry 9037. CR. Entry. There's the high. There's the low. That's the bounce. It did bounce back here and kind of failed with a higher, I guess just a return to the bottom. So technically you could grab this all the way back here. The algorithm is only grabbing this high right here because this went below the roadmap line. It didn't actually trigger on this one because it took too long to bounce. Those ones this is a classic example of why I got the filters on right here. This took too long to bounce, and I filtered those out because they're likely to come back down to the bottom. These nice fast bounces, higher likelihood to get continuation. So 205.22. This one doesn't have a history of trending. Here's the high, there's the low, there's the entry, 9606 target. Not a bad one right here. Even if the next 10 trades were losses, it's probably not going to kill these numbers. This has a history of trending. Trend, pullback, continuation. DBA. That doesn't look too awesome. So the algorithm grabbed this little guy right there because of this negative price action below the roadmap line. There's the entry, 27 targets. I wouldn't touch it. It filtered out on the algorithm here on TradingView. I don't have the aggressive filter on my Python tool. I run Python through like 4,000. Python's a programming language, scripting language, some call it. I pull alpaca data on 4,000 tickers after the close every day and hunt for these bounces and kick out a list for my VIP all access members. And these are all the tickers that were on the list yesterday after the close with these entries for today. Now, I want to know all the potentials so I can, look at them and see. I don't want to miss something. So very aggressively, I pull everything, no matter the bounce, and then pull it up and look at it on TradingView with this algorithm turned on. And that's where we see these entries and stuff right there. And then some of them don't actually fire off the entry. Like, This one not firing off the entry because it's so kind of sloppy. Filtered it out. This one also getting filtered out. That's the little bounce. 119 target. 41. I mean, that looks reasonable on Disney. Can easily pop up to that 120 area. I guess licensing some of their characters to OpenAI for the Sora. Seems like it's going to be a good deal for Disney, maybe a good deal for OpenAI. $53 targets. It's got a fair history. It's not statistically significant. 30. We need at least 30 to be statistically significant. So anything under 30, nah. EVCM. Wow. Kind of a nasty chart right there. Grab that high, grab that low. There's the entry. 13 target. Failed last time. Worked the time before that. No statistics that mean anything. GATX. So there are a ton of train cars with that serial number, GATX, and then a number. It's just like I used to heat train cars so that we could offload the oil product to make seatbelts, and so many serial numbers on the train cars were GATX. Just funny to me. 182.60, 50 trades in the history, 74% of the time. This is just a classic, right in the historical. Like if you want to play just a standard ticker right here, 170 to 182, that's the play. Take 45 days on average. If you add the 3 standard deviations to it, it's 35 is 1 standard deviation times 3. That's 150 candles. So if you're trying to play options or something like that, give yourself 7 months. For 99 percentile, at least 1% of the time, you can still run out of money, run out of time on your option. But 7 months, playing shares is probably the better bet on these longer time frames. GXO. Here's the high, here's the low. Entry 59.50. HLMN. Look for the entries. 10.78. HMC. Ooh, I don't like gappy price action like this. Not for me, baby. Now the algorithm picked up this one right here. That one with a 32.50 target, but yeah, it's not for me. Even though it has, pretty darn good numbers here. Pretty darn good numbers, but that didn't fire off that bigger, the algorithm here in TradingView is not actually firing off. So I would want to see that up through 32.20 and then go after the 35 target if I was going to do it, but Honda Motor Company. And here's the high, here's the low, there's the entry, 497 target, 53.83.3. This is that was a good one. Hubble bubble, really good quality. I may actually do this. Yeah, I may buy a couple shares in my 50K challenge account just to see here. Put this over. Tell myself, give myself a reminder. Take a look at Hubble Bubble. All right. ICVT. Look at the high, look at the low. 105.60. IVT. Look at the high, looking at the low. Entry 30.95. KFY. So this big bounce, and you can see the algorithm didn't like it and hasn't liked this either. So that would be the bounce I was looking at. This is the bounce Python found, and that is an entry with the target up at 73, but yeah, I'd probably be looking at the bigger bounce, and this just doesn't look awesome. So, and then the profit factor is negative, and it just, not awesome. Lunar, make a play on space robots, robotics and space robots. This is the play right now. This is hot stuff. Everybody's talking about space data centers and all that stuff. 1550 target. EMA. MasterCard. This one worked out. It took a while. Worked out. Looking at this new one back here. That was the entry. Looking for 589 is probably what it picked up. I would wait for the close above this right here, 570, and go for the 613 target. MPX. Here's the low. Looking for the target, 981. Mountain Vale Resorts. And it's a downtrend. I wouldn't play this until it breaks out of this downtrend. Gotta break out of the downtrend. OMC. For 84.50, that's pretty reasonable. Actually, that's really good. Look, really good numbers there. I mean, I would want the profit factor a little higher. That's pretty good numbers to begin with. Signet, no. SIGI has the extra selective insurance. I mean, it has good numbers. A lot of good ones on here today. OMC. I may pick up a few shares, a bunch of these. OMC and SIGI. Things I've never heard of. Or never, I don't know this one off the top of my head. Site. A little less awesome here. I'd be looking for that bigger bounce, not the little bitty baby bounce it did right there. You can play the little baby bounce. It just needs a target at 140. SKYT. Skywater Technologies. 2650. Tex. List is pretty long today, like 30 tickers. High, low, entry 6119. And negative profit factor. UNM. We've talked about that one a couple times. Hasn't actually triggered this algorithm, so this algorithm keeps filtering it out. 7987. And they're continuing to work on the space downstairs. If you can hear sounds like they are sawing on something. If you can hear that, I apologize. They seem to be getting all the drywall hung up, so hopefully the noise is going to reduce in the next couple of days here. Visa also coming up. This bigger bounce. This is, this is a proof about the 7-month thing. This bounce back here came up shy of the target. So there's actually a target sitting here that this algorithm is waiting for. If you grabbed this high and this low, dang, they just shook this whole room with whatever they just hit downstairs. Anyway, target 383. This will hit the target somewhere in here. Run that. High to low. And 378.39. Want to talk about 7 months. Here you go. There was the entry. See where this is one of the 1%ers that lasted more than 150 bars. How long do we last? So I hadn't stopped out. I hadn't gotten the target either. So sometimes, even if you get the 3 standard deviations of time, you might run out of money, run out of time on your option. VMC, Vulcan Materials, and Vulcan Materials. I think this is a big international company, probably. They have a lot of, they have several offices here, several quarries. And all over the place. Birmingham headquarters. I was just curious. They used to come to all the little like things at school and try to get you to be interested in their company and whatever. Potential for this to come on up to 316. 41, 90, and 4. That's a smoking hot one right there, too. DMC. Add that to my little personal list. I might jump on that one. Just look at that, 90%. It's not like this fires off all the time either. Like last time it fired off, it worked right back there. VOT. We're down to only 80 people left. Here's the high, here's the low, there's the entry, and 303. Another smoking hot one. Like this one, despite being under 30, 82 and 5.4. Nice upside potential right there on that one. So there you go. That's the ones that were set up for entries today. Rick Westco is on Tuesdays. Kid fishing. Tuesday, 5 p.m. So bias for the day. What am I watching for? I am on high alert for a bigger pullback, and that looks like what we might be starting. Targets are down here. Right here, right here. So might be a 3%er. 3 to 5% pullback is probably what we're gunning for. Careful out there, everybody. That may have been the top. Now, if we can find supports, break back up through probably 6,900. This little high right here. And that consolidation. If we get back up through that, some way, somehow, we find a bounce, break back up through 69.10 on futures. That'd be a little less on cash. Probably going out 7,000 is probably the target. If we can do that. But otherwise, we're probably coming down here in 6,700 possible and 6,600. We've had this big down arrow on the chart for a while. This would be the ideal spot to come down to right here. There you go. That's what we got. So be careful out there, everybody. The account you save may be your own. I'll be back on Monday, same bat time, same bat channel, 9:15. We'll hunt for opportunity again. Go through setups, opportunities, what I'm doing. I'll be Market Masters at 11:30, and I'll see you.